Hi everyone, welcome to First Mining Gold's live investment summit today hosted by SIX. 2020, a year of transformation. We're joined today by CEO Dan Wilton, and we also have on the line Spiros Kapos, Vice President of Investor Relations, who's going to be leading our live Q&A segment today. Dan's going to kick things off by walking us through a complete presentation, and as I mentioned, we will be opening up the floor for questions. Remember, you can always submit your questions in the Q&A panel on the right-hand side of the screen. Today's presentation is also downloadable in the Handouts tab, so make sure you check that out. And as always, this event is being recorded and will be available on six.com afterwards. Now, without further ado, I'm going to hand it over to Dan.
Thanks, Jane, and thanks to all of our partners at SIX for hosting us yet again in another one of these webinars. We've had a few of these this year talking about, some pretty significant changes in our business. And as we were reflecting as we're coming in toward the year end here, we just wanted to take some time to have an opportunity in this format to connect with our wonderful group of investors again, and we really are blessed with a shareholder base who's so active and engaged. So thanks for joining us again today. I'm going to make a few forward-looking statements as we go through this presentation. Listen, it's really important as we were taking a step back, looking at what we've accomplished as a team in 2020. Wanted to highlight a couple of important things, and that's, that our team is continuing to change. And I think we continue to make really good quality additions to our team. And most recently, there's a couple of team members who joined that we just wanted to highlight, one of which is Steve Lines, who's just joined us as a VP Environment and Community Relations. Steve has a fantastic background in leading mining companies through environmental assessments, and actually has a background as a regulator prior to that. But most recently, Steve led the permitting process, all of the environmental assessment process of the Hard Rock project, which is Greenstone Gold Mines joint venture between Centerra and Premier, which is a very similar size and scope of project to Springpole. Actually, probably the most comparable project to Springpole in terms of size and scale in Ontario. So Steve comes to us with great relationships really throughout the province, and I think a real demonstrated ability to move the project forward, not just through the EA process, but also to build those really critical win-win relationships with the Indigenous communities in the area. And also just want to highlight here, we had Richard Wong join us as our new VP Corporate Development. I think only a couple of months ago, but already making a huge contribution. So we continue to make some great additions to the team, which I think is really going to speak to the program that we'll talk about for us to continue to surface value for the company as we move into 2021. Another really important addition to our team is on our board of directors with Leanne Hall joining us. And Leanne has an entire career of background of really working with and forming partnerships with and working for Indigenous communities really throughout Canada. So we're absolutely delighted that Leanne's joined us. And again, on a board level, already making a great contribution. So some really important changes to the team that I think are going to reflect in, as we'll talk about the game plan going forward. I think make sure that we have the right lineup of people moving into what is going to be a really critical year for First Mining in 2021. So we won't spend too much time on the overview of the update. I suspect most of the people who are here with us today are long-term shareholders, but just to make sure that we do hit the highlights here. Advancing Springpole, which remains one of the largest undeveloped open pit gold deposits in Canada. Pre-feasibility study, we are not quite, but almost to the point of seeing our first glimpses of the economics of the PFS, and ultimately aiming to have that PFS out in January, which we're very excited about. And continuing, and we'll talk about the game plan for 2021 and some of the catalysts, but really 2021 is a real focus on moving Springpole through EA process and formulating, finalizing, and submitting that environmental assessment document. And as you will know, we're very well funded from all of the capital raises that we've done in 2020, and I think in a remarkable environment where I'm delighted to be in the office today, but much of 2020 spent working from the basement office at home. I think we really in this pandemic have been able to do some pretty amazing things, and that's a real testament to I think the quality of our team and really the dedication they put into moving things forward. So absolutely delighted with that. On top of that, we remain the largest shareholder of Treasury Metals, which is making some great progress in advancing the development of the combined Goliath and Goldland project. So I think some exciting news coming out in Q1 around the first real PEA and scoping of those combined projects, which I think is going to give a good sense of a development path to the market, which we're very excited about that. And as many of you would know, we are still planning the distribution of a portion of our shares, about half of the shares and all the warrants that we got in the Treasury Metals deal. So very excited about that, and that again should be happening around the time of our AGM. We're just working on some of the finer points of that plan right now, and the balance of the portfolio. As we've sort of changed the degree to which the company is funded and changed our kind of financial capability here, we've had a bit more of a focus on the portfolio assets, and I think have a really well-developed game plan that we've started to execute on, and we saw that in the last couple of weeks with the announcement of our continued consolidation of our Cameron project, and some really exciting opportunities around there as well. We continue to trade at a significant discount to our peers, and our number one goal in 2021 is narrowing that gap of that discount that we trade at relative to our peers. And I think we do that by continuing to focus on the fundamental value of the assets that we have. And I've already talked about the team. So, it's as we've been coming to the end of the year and spending some time thinking and recapping what we've done, it's been a really busy time. And as you can see here, I think this just lays out what's been really the kind of the key strategic moves. With starting the year with our Pickle Crow option and our agreement with Techo Minerals, great partners. We were on another, we kind of have monthly meetings with Techo on Pickle Crow, and had our December monthly meeting yesterday, and great to connect with them. I think the team's doing a fantastic job moving that project forward. I think some really exciting things coming as they're getting a better understanding of the resource at Pickle Crow, and they're really excited about resource growth, which is exciting. Our smaller equity financing, which we're very happy to have completed in late February, early March, which really gave us proper breathing room going into the pandemic. And that, I think, allowed us to take a step back and focus on a couple of the things that we thought we really needed to do in order to really surface the value of our assets and change the long-term sustainability of our business from a funding perspective. And so we did a couple of those things: our Goldland Goliath combination with Treasury and our Silver Stream financing with First Majestic, both of those announced in the first half of June. And that led to, I think, once the Silver Stream had closed, people started realizing that we actually had a proper funding runway to advance Springpole through some really key milestones. And that allowed us to complete our bought deal financing in August. So, but on top of that, those are sort of, if you look at those as the key milestones, a lot of other work ongoing. You can see in the key 2020 announcements, the PFS at Springpole, which is really rounding the corner to its conclusion. This recently consolidated the land package around Cameron. Big drill program going at Goldland, which we'll start seeing results in the new year. Very big drill program going at Pickle Crow. It's the increased indigenous sort of indigenous background and track record with Leanne Hall joining us at the board level, and then continuing to add to our team with Steve, as I talked about. So I think we're really, really well set up for a 2021 that's going to have us making some great progress on our milestones. Sitting today with just shy of 700 million shares issued and outstanding, fully diluted a little over 800, market cap at around 300 million, cash on hand, I think that's probably ticked a little bit below 30 at this point, but still, the important point on this is between cash on hand, marketable securities, and the balance of our silver stream receivable, it's about $60 million of financial flexibility there, which we think gives us a really good, solid footing to be able to confidently move Springpole forward and make the investments we need to make to get Springpole through the EA process and to the finish line. Current ownership, a small but growing institutional component at about 16%, but still predominantly 80% retail investors. And a lot of our long-standing and really supportive investors who've been with us the whole time that I've been here since the beginning of 2019. And it's difficult for me to overstate how much we really value and appreciate those shareholders who are so engaged. And again, thanks for being here to join us today. So when we look at 2020, you know, the word transformational is used a lot in business, but sort of joking aside, I think you can see here some of the change, you know, just in the cash position, and that's just cash. And you add on the marketable securities, that would be from 6 to 60. The cash and other investments, you know, sort of ending last year with about 8 million. Today, that number is 175 million when you factor in the attributed value of Pickle Crow and our Techo shares and our ownership of Treasury and some of the other things we got in the Goldlund deal. You know, a real step change in the financial flexibility of this business. And I think answering what was one of the most pressing questions that we always faced, which was, how are you going to keep this company funded to go through a really expensive EA process? So I think we have finally put that to bed in 2020, and we're very proud to have done that. When you look at the change in the share price, a nice reflection versus the GDXJ. You know, I think that's just a reflection of how the market, you know, as we've sort of changed the risk reward profile of the business, how the markets actually come to understand that, and our market cap now increased to about 300 million from, you know, in the pandemic times, Canadian dollars, I think it got to it was about 100. So this is a really meaningful change, and I think leaves us very well set up to move forward through 2021. Again, here are some of our key catalysts and why we're so excited. You know, we've got the Springpole PFS, which we're anticipating having out in January. With that, we'll trigger another $7.5 million receivable from First Majestic, which again continues migrating some of that stream receivable to cash. And then over the course of 2021, the real focus, prepare and submit the environmental impact statement document, continue in our consultation and really collaboration with our local communities, continue the technical de-risking on the project. So we've got some metallurgical and some infill drilling that we're actually just finalizing the scoping of now on Springpole, and very excited about that. And I think that'll lead to basically the last of the technical work that we feel we will need as we advance toward feasibility. And then for the first time in a long time at Springpole, actually conducting some regional exploration, which we're very excited about. We've got a couple of really interesting targets that we're going to test this year, actually in the next couple of months. So we hope to have some interesting news around there. And then on Treasury Metals, you know, I think we're going to see this integrated Goldlund Goliath PEA in Q1. I think is going to give the market a real sense of how how that project is really going to frame itself up as one of the more robust development projects in the sector. Big drill program, both infill and extension underway there, and we're targeting again that distribution of half of our shares and all of our warrants directly out to our shareholders, sort of by the end of Q2, which around the time of our AGM. So work on that is in process. At Pickle Crow, 45,000 meter drill program, which we're speaking with our partners at Techo yesterday. They're driving toward having that done kind of by the end of Q2. So I'm giving them a little bit of a leeway here. And on the back of all of that, drilling and exploration, they're going to look at preparing a new resource, is our understanding. But as we think about the timing of when they are going to execute on their earn-in spend, we think it's their phase one earn-in, which was after $5 million of spend, I think will happen in Q1. And to get to the balance of that $10 million spend, it should coincide probably with the conclusion of that 45,000 meter drill program. So and important points on there is that triggers some obligations for them to deliver us some cash and some more shares. So yeah, I think that's not to lose sight of that, but more importantly, it's just the value that they've been able to build and focus people on at Pickle Crow. And in the other portfolio assets, again, I think some interesting consolidation and moving forward on an exploration plan at Cameron, where I think we're getting a better sense of a real regional picture at Cameron. And what a lot of people don't appreciate about Cameron, we'll talk about this in a minute, but you know, it's sitting less than 100 kilometers from Rainy River, but it's also sitting about 100 kilometers from Dryden. If you go sort of the roads and sort of through the forest to the forestry trails to the north and east. So pretty interesting outcome there, but we're excited to get back to work at Cameron and get some exploration going there. But over the course of Q1, doing some important consultation with our communities at Cameron as well, moving through there. And then on the balance of our assets, Hope Brook, Quebec royalty portfolio, we still think that there's lots of value for us to surface in First Mining in 2021. So lots of work going on that front as well. And how does this all reflect in our current valuation? We think not very well. As we think about our value and really the constituent components of our value, this is how we've really been framing the value proposition for First Mining for our investors. As we see it, we're sitting with about a 300 million market cap. You know, strategic investments, cash and securities, and that silver stream coming totals about 190 million of the 300 million. So you are getting the balance of about 1.7 billion dollars of asset value for about 100 million dollars of market cap. And important in that is the NPV at Springpole, which we show here. This is at $1,500 based on our PEA. And I think that we're very, very excited to see how the economics are going to shape up through the PFS. But irrespective of that, there's been a lot of really, really good work and thought into how we define the most robust project that we can at Springpole. So a lot of really good technical work, important trade-off studies having been done over the course of the last year. Our understanding of the natural environment, our understanding of the flexibility of the deposit, our understanding of the metallurgy, all really significantly advanced. So we're very excited about that. And then the other portfolio assets, Cameron, Hope Brook, Quebec. I mean, I think each of those should be reflected at 50 to 100 million dollars of value or more in our market cap. And right now, you're definitely getting those for free. So I think our view is there's some opportunities for us potentially in 2021 to move forward a few of the other projects ourselves, or potentially find some partners for a couple of the other projects as well. So, but it leaves us sitting very clearly still at a very, very attractive valuation. And I think we see very few impediments from us going from where we are sitting today to getting up to a value that would be more representative of your advanced developers. You know, we're going to be declaring reserves at Springpole in 2021, early in 2021. And I think when you look at the quality of our reserves, the quality of the project that Springpole is, and how we are funded to move it forward, we think that we deserve to be certainly further over, if not really toward the far end of this chart here, over on the right side, not the left side. So that's our goal in 2021, is to migrate our value over, you know, up toward and potentially past that advanced developers average. The impact that would have on the company would be a, you know, doubling, tripling of market cap. So how do we get there? The answer is very simple. We need to continue to focus on the fundamental value of our projects. We need to have great people moving them forward. We need to work in collaboration with our local communities. And we need to continue to advance the projects. And that's exactly what we're going to do. And we're very well funded to continue to do that. So I won't take up too much more time here. I think I'll move pretty quickly. You don't need to go through all that much detail on Springpole. I think everyone understands it, but only to say, you know, with respect to catalysts in 2021, PFS coming out, we're targeting for January. So you won't have to wait too much longer to see the progress there. And again, our critical timeframes here, and I think if there's on this, this has been the timing slide. If there is one impact, and we're just getting to a point of understanding it now with Steve having joined us and really going back to reassess the timeframes on the environmental impact statement and the EA process overall. I think you probably end up seeing this EIS document pushed out later in 2021. But our goal is still to get that filed in 2021, start this federal and provincial review process, and ultimately still targeting federal and provincial EIS approval in 2023. So on the back of that, PFS coming out early 2021, lots of sort of longer lead time technical work that we, and it's really going to be sort of optimization work that we're going to look at sort of in advance of a feasibility study, but ultimately looking at a feasibility study. We'll figure out when exactly we kick that off. You don't want to do it too early before you have your environmental approvals. And a big part of what we need to do in 2021, in consultation with our communities, is make sure that we have really properly listened and understood their concerns and have a chance to reflect that ultimately in the environmental impact statement going forward. So there's some really important work that needs to happen in the first half of 2021 around understanding traditional land use and traditional knowledge of our key communities in the area. So we're very excited to get that work underway as well. But I think you don't undertake a feasibility study until you've really kind of, with our communities, make sure we've locked down a scope and invest the time up front so that everyone's comfortable in that process as we move forward. So lots of work going on at Springpole. And then on the broader portfolio, again, very exciting times at Treasury Metals. The new CEO, Jeremy Wyeth, started last week, I think. You know, seems strange that he's already making, I think, a really big impact. Having only been there, well, I think he's only been there a week, but we're very excited about how this program is being scoped up. And again, we think Golden Lung Goliath is going to show itself to be one of the most robust development projects in Canada. Our partners at Techo, again, this 45,000 meter drill program, and ultimately a resource update, I think, to come on the back of that. Very well funded. They've got 31 million in cash, and you know, I think third drill rig, if it hasn't hit the site, it's on its way, and they're talking about even increasing from there. So very exciting times with the Techo and Pickle Crow. They're hitting it really hard and have been great partners to work with. And Cameron, this we announced a couple of weeks ago, and it fills in a really, really important part of our land package. at Cameron, and the Cameron deposit, the resources that we have stated is really just at the main Cameron deposit, but the Cameron project is a much bigger regional package. So, and it's geologically complicated. It's seen a reasonable amount of work, lots of drilling in different areas, but I don't think anyone's ever really put together a proper large scale structural understanding of the area. And so I think we have some really foundational work to do here. But the leverage coming out of Cameron, I think, is immense. And it's immense because it's in a great location. And ultimately, if you believe that Gold Goliath's moving forward and you've got Rainy River, less than 100 kilometers away, I think it just leaves you with a number of different options in terms of how a project at Cameron could develop over the next couple of years. So very exciting, and our main focus, I think, is to scope and ultimately get a drill program going at Cameron in 2021. So we're very excited about that. And then the balance of the assets, again, never have enough time to talk about them, but our Quebec projects, it's a really interesting set of assets in Quebec that we've started to turn our minds to how we might surface some of the value there. Hope Brook is sitting with almost 844,000 ounces of indicated gold resource on the coast in Newfoundland, in a very exciting exploration district. And then one of the things that we don't spend a lot of time thinking about, but ultimately we spend a lot of time thinking about it, we don't spend a lot of time talking about it, is our gold royalty portfolio that we have in this company, where, as we've done deals on Goldland and Pickle Crow and some of our Mexican projects and the project we had in the US, Turquoise Canyon, it's leaving us with very interesting royalties that, I think those alone could have a value, in that $50 to $100 million range if you look at some of the comparables for advanced stage projects and million-ounce resources in great jurisdictions. So all very exciting there. Lots of work to do. And ultimately, our real focus here is unlocking the value for First Mining shareholders. So I think we've got a great plan to do that at Springpole. We're going to see some of that value at Gold Goliath and at the portfolio assets. I won't spend any more time than that, because important here, what we'd really like to do is take some questions from our shareholder base. And again, thanks everyone for joining us, and a very exciting 2021 to come.
Great job. Thanks, Dan. Yeah, the first question here is, what is your current view on the M&A market? Are majors going to be making any moves?
Yeah, listen, I think the M&A market is very early in the first period in this cycle. If you go back to really the last peak, call it 2011, you've seen not just a lack of investment, but you've seen disinvestment from large mining companies in projects over that 8 or 9 year time frame. And that was never going to be sustainable. The larger companies have now come to realize, and I think they started realizing as the gold price started moving in 2019, that they need to start thinking about what the production profile looks like in kind of 2025, 2030. So these are sustainable businesses that are running on depleting assets, right? That's fundamental to the gold business, to the mining business, is that your assets, every ounce you produce is an ounce that you don't have in reserves anymore. And so those need to be replaced. And I think when large companies have started looking at the end of 2019, they've come to realize that they need to focus on some of those projects. If they want production 10 years out, they need to focus on projects that, can start being built in the next 5 years. And that narrows down a certain scope. And then you look at what projects are available, what projects have size and scale, and what projects are in jurisdictions that you'd like to own them and mine them. And that gets you down to a very, very small list. So I think we haven't seen a lot of activity, largely because that the first real push from big companies started in late 2019, early 2020. corporate development people got budgets, and then the pandemic hit. And so for a while, no one really could go and see projects. I think collectively the industry's all sort of solved that. We've now found a way, with appropriate quarantines or whatever else we need to do, to be able to go out to see projects. What's another differentiating factor for our project suite is the location of it. You can get to our projects pretty easily from anywhere in Canada, for sure. So I think we are at very early stages and going to start seeing more M&A activity. I think you're going to see it starting on the larger producing assets, single asset producers consolidated into, multi-asset producers. And then at some point, as has happened in every cycle in the gold industry, the larger companies start looking at their development pipeline and really trying to focus on where they're going to be able to add significant ounces. And that is difficult. And that's where our opportunity is to have our projects ready at exactly the time that the industry needs them the most. And I think with Springpole, we are spot on right there. So we're very, very excited about that.
Perfect. Thanks, Dan. Next question. Do you have a timetable for the distribution of the Treasury Metals shares and warrants?
Not a formal timetable yet, although I think what we've been consistent in saying is expectation is it would be around the time of our AGM. So we have a commitment to distribute those by August, but I think our intention is it'll be around the time of an AGM, which would be mid-June. And so there will be a record date in advance of our AGM, like we would have for any AGM, where shareholders of the record date actually vote. We would need a shareholder vote to approve the distribution. And then once that happens, it all kind of happens automatically. You will wake up one day with the shares and warrants of Treasury Metals, and your same shares of First Mining, which won't have changed, and it all sort of happens pretty automatically. And those warrants, so Treasury is already listed on the TSX and OTCQX in the US, and they've committed to list the warrants as well. So the time those get distributed, those warrants are going to have in excess of 2 years of life on them. And sitting right around at the money, it'll be about I always get a bit confused because there's a 3-for-1 consolidation of the Treasury shares. So I think back to the pre-consolidation numbers, but it's about $1.50 exercise price. So it's trading more or less at the money with 2 years of, really 2+ years of time value in those warrants, which I think are going to be very, very valuable. So particularly in the time frame that you're going to see Treasury move forward. So I think it's very exciting.
Okay. Next question. With the wheels turning on Springpole and the other projects, Newfoundland has caught investors' interest. Any comments or thoughts on Hope Brook? Yeah, listen, I think it's a great project. It really is. It's got a large and established resource. It's a past producing mine. So they produced almost 1 million ounces out of an underground mine at Hope Brook from the early 90s to about 1998. So the metallurgy is well understood. And I think, what's interesting, the opportunity last year to go to one of the world's great mining conferences in Bayvert, Newfoundland. This is the Western Newfoundland Mining Conference. And, I really got a good sense of the community that is around in that part of Newfoundland around mining, and lots of really exciting exploration and development with, Marathon Gold having really led the charge, but now with Newfound and others, some really exciting exploration potential in Newfoundland. And I think Hope Brook has similar kinds of exploration potential as well. There's something like 30 kilometers of prospective strike length at Hope Brook. So yeah, I think it's a project that deserves to be moved forward. The challenge we have is that we've got a lot of work to do on our other projects. So that's where we're scratching our heads a bit and wondering if Hope Brook would be a logical project for us to find a partner on. It's something that we're still considering at this point, but
No, I think it's a great project, and right on Tidewater, already has a power line to the site that's still energized. So there's all kinds of advantages I think that area has versus some of the more remote or difficult to operate in areas in Newfoundland. But no, it's very exciting. It's a great jurisdiction, and we're excited to surface some value from Hope Brook.
Perfect. I'm going to bring you back to Springpole now. What gold price assumptions are you going to be using for the Springpole PFS?
It's a good question. I mean, I think we are ultimately going to look at something that's around, the benchmarks would be 3-year trailing average and a long-term consensus. And I think when you look at the 3-year trailing average and the long-term consensus, both are around $1,500, which is sort of in the same ballpark that a number of other studies have come out with over the course of the last few months. So I think, as important as that point estimate, it's understanding the sensitivity of the economics to changes in gold price. And that's something that we'll make sure that we have pretty well understood and described in the PFS, because, a lot of us have a view of gold prices going significantly higher. And so understanding the leverage that the project has to rising gold prices is almost as important as understanding, the spot, spot NPV at whatever the current long-term consensus is. But the one thing we're confident of is this is a really robust project. And for all that we believe in much higher gold prices, this project isn't going to need much higher gold prices to warrant a construction decision when you get it through the permitting process. So that's it. Just, I think it's going to speak to the robustness of the project, and we're excited to show that as we come through the PFS too.
Okay. Next question here. You have only 16% shares ownership from institutional investors. What strategies are you employing to get First Mining Gold, institutional radar, and more? Also, can you get included back into the junior mining in ETFs?
Well, on the first part on institutional investors, that was a significant reason and kind of side benefit of the financing that we did in August. About 90% of that financing was taken up institutionally, and it allowed us to get some great investors positioned in the company. And a number of those investors have continued adding to that position over the course of the last few months as well, which was exactly the goal. So we've got a great group of institutional investors, and that group is continuing to grow. Listen, I think we need to focus on a few different elements to continue to build that. Part of it is getting some broader conviction from the research community. We're covered by a small number of great analysts, and we appreciate all the work that they do. But I think, some of our peers are covered by significantly more places, significantly more firms. So I think that's an area that we can continue to build. And part of it is, we just need to convince the institutional world, particularly of the degree of urgency and value that we're seeing right now. So we often kind of face this feedback of, why do I need to invest now? And I think the answer of why you need to invest now is not really any more difficult than, we're trading at $14 an ounce versus trading at, our peers are trading at $89 an ounce. So you've got this kind of 5x leverage return, which is not, it's the theory is it's, might not move significantly before you have your environmental assessment approvals. And it obviously is pricing in some of that risk. But I think when we look at it, we have real confidence of our ability to get the project to those milestones. We're now fully funded to get the project to those milestones. And we don't believe there are any significant technical hurdles for us to do that. So still lots of really important work to do to get there. But that value doesn't tend to surface, overnight in a jump. It tends to accrete over time as you make advances on demonstrating your progress in a reasonably well-defined permitting process and demonstrate progress in your community relations and ultimately your community support for the project. And so that's why this is going to be a really important year for us to make sure foundationally we're making really good strides on that to surface that value. So that's part of the institutional side. I think it will continue to grow. As investors, I think gold prices are going to continue to go up. Investors looking for leverage to the gold price, I think we're a very, very attractive home for that. So that's that part. On the GDXJ, I've always kind of said that's it's an outcome of a strategy, not a strategy. So I'd love to be included back in. Being in was better than not being in, and being taken out was made for a pretty painful 2019. But with all of that behind us, I think right now, Spiros, we trade a couple million shares a day on the TSX. At 40 cents Canadian, we would need to be $1 million US. Trading volume on average over, I think, 3 quarters. So
we're just slightly shy of that.
Just slightly shy.
That's the only box that's missing.
So I think there's, as we continue hitting our milestones, our value accretes, increased investor attention and increased trading. I think will bring that over the course of time. I think increased consolidation in that junior sector is going to help drive that as well. So, love for it to happen. Can't tell you when it's going to happen, but I think when we continue to hit the values, it's going to surface on its own.
Okay, thanks, Dan. The next question here is, what is your strategy with a gold royalty portfolio? Do you consider selling it or expanding it or spinning it out?
It's an interesting question, and I think the person who's posed that question actually, is kind of hit on 3 strategic alternatives. One is, do you grow it? One is, do you spin it out and surface value of it that way, allow it to continue to grow? Or do you, try and capture some of the value from some of these emerging royalty companies that are trading at exceptional values? And ultimately sell the portfolio. I think there's a couple of different paths we can go down to do that. We're looking at a few of those paths right now, and it's it's reasonably well-trodden ground. I don't think we have to break any trail in doing this, but I think one of the things that people just don't appreciate from that royalty package is the quality of it and the location of it. Assets that are actually in development, assets that are going to get to production in a 3 to 5 year time frame. So I think ultimately, if we were going to do something with a royalty package, you'd like to have something with some reasonable size and scale. You'd need some dedicated resources to moving it forward. So we're looking at all of those as alternatives now, and ultimately, whatever we do with the royalty package is going to be really designed to make sure that we can surface more value in the First Mining share price to reward our shareholders and ultimately have that reflect some of the value of some of these other deals that we've done.
Okay. Next question here. How is the second wave of the corona pandemic affecting operations? And what is the policy of the company regarding vaccines? Strictly voluntary?
Well, that's an interesting question. So in terms of the impact of the second wave, the first wave largely left our main project area in Northwest Ontario, largely left that untouched. There were a few isolated cases, but it was, they did a very good job of controlling the pandemic in that part. And, we were deemed an essential industry really from the beginning of the first wave. And so we have always had the ability to move people in and out of camp. As the second wave has arrived, our local area has become a bit more of a challenge, particularly around Winnipeg. where some of our workforce comes from there, certainly the area of northwestern Ontario between Winnipeg and Thunder Bay, there is a lot of travel back and forth. And so it's just introduced more sort of need for more caution. And I think the biggest impact that that COVID-19 has had on our business has been not so much on our projects, but more on our Indigenous communities who have obviously been very, very focused on understanding and mitigating potential risks of COVID in their communities, and that's just had follow-on impacts for us. And where normally we would be in the communities doing community presentations as part of our consultation work, that's been more difficult because a lot of the communities, have been opened or closed over the course of the last few months. But I can absolutely understand the health of the citizens of the First Nations. It has to be the absolute priority, and so it's slowed things down a little bit on our side, and it's, I think, taken up a fair amount of the capacity that the communities themselves have in helping move forward other strategic priorities. And we're aiming to make sure that we have the kind of partnership where we can be seen as some of those priorities. But that's kind of been the biggest impact for us, and coming as we're looking to kind of remobilize a reasonable winter work program up at Springpole. There's just more considerations around how do you deal with testing and how do you make sure you keep the camp operations safe. But we've had really robust COVID protocols, and so far, knock on wood, have managed to operate in a very safe and effective manner through those COVID protocols. So, we'll see. We're all optimistic about vaccines coming. It'll probably take a little while for that to really work its way all the way through our workforce. But I'm hoping that there's going to be some, government prioritization of those working in remote camps, much like there is in remote communities, where if you're that much disconnected, at least having some support, whether it's on more frequent testing or whether it's actually an approach to vaccination, which could help prioritize those as areas of spread, or areas of spread that you want to avoid. We don't have a formal company policy on vaccines right now, so I think that's something that we'll have to discuss as a team as it starts to come toward fruition. But I can only say on my own side, one of my main extracurricular activities is vice chair of a health group here in BC, Providence Healthcare, and we're very excited, as are all the frontline workers in healthcare, to have access to it. So I think we'll wait and see on that one.
Perfect. Going back to Springpole, it's going to be a two-part question here. The first part is Springpole under a lake, and what infrastructure is in place at Springpole, such as roads, power, etc.?
Yeah, so the Springpole Portage zone, the main part of the deposit, sits under a shallow bay of a lake on a northern bay of Springpole Lake. So that's one of the things that's been known since it was discovered, was that it's there. And listen, speaking frankly, that's a big part of the reason why we have this value disconnect, is because there are a number of people who've looked at the project who just haven't really looked at the data that we have at the project, which has been in more or less continual collection since 2010. So I think, one of the things we're hoping with the pre-feasibility study and the level of engineering that we've achieved, the level of thought that's gone into the development plan, the level of thought and scoping around, really making it as environmentally robust a project as we can. I think when people get to actually understand that, it's pretty easy to get their heads wrapped around. So the development plan involves building less than a kilometer of cofferdams, which average, 5 meters or 15 feet high. So, those of you who are living in a house, it's not quite probably your house is higher than these cofferdams are going to be on average. We've had them engineered at a pre-feasibility level by a group that really does nothing but engineer cofferdams. And when you look at the economic impact of it, relative to what would otherwise be a pre-strip in an open pit mine, it actually, in the grand scheme of things, it adds kind of 0.1 to 0.2 on your strip ratio. And that's kind of the economic impact of dealing with the water. Now, there's the environmental impact. Is you just really need to have a very thoughtful plan. You need to understand the water movement around the site. You need to understand how quickly you might be able to move the water into on the other side of a dam to dewater this part. But it's all part of a development plan that we've now spent another year thinking about, and have some really, really strong technical work to back up our at least our snapshot of a development plan. So I think we're very excited about that, and hoping that the pre-feasibility study that we see is really going to give people a sense of that technical confidence of how we're going to move the project forward. And I guess the second part of the question on the infrastructure at Springpole, interestingly, the forestry road networks have been continuing to advance up towards Springpole, which is interesting. We have a winter road that goes in over Birch Lake that we had last year. Hadn't had it before that for a couple of years, but the winter road, we're excited to get in and hopefully have access in January to be able to drive to the site, which is helpful for camp resupply and fuel and other things. But we are about 40 kilometers from a 115 kV power line on the power grid, and about 100 kilometers from a brand new 230 kV power line. So power in the area, forest road network in the area, and the road network ultimately is something that's really important, particularly to one of our main communities at Cat Lake. And so I think it just opens up a lot of opportunities to potentially for Springpole to play an important role in providing road connections to some of our more remote communities, and particularly Cat Lake. So that's that kind of partnership, I think, that really ultimately can open up real support for the project amongst our communities.
Okay. Dan, here's one. Dan, could a greater than expected reserve influence the valuation?
Greater than expected reserve. Now, I would say it's pretty rare that in a conversion from resource to reserve that you get much that's that's greater than expected. Listen, I think in the end, every ton of reserve helps. Extending your mine life, and I think as we have started to see kind of final mine plans for the PFS, there's it's a very robust reserve that we're showing, but there's going to be some opportunity for further resource conversion, which will be part of a plan that we'll have for some infill drilling on the edges as we kind of finish up the PFS and think about this work program going forward. What I think could really add some interesting opportunity and should really add to the strategic value of Springpole is some of the regional exploration. So we've got some really interesting targets that are starting to come together based on, as you're building out a mine, one of the things you do is called condemnation drilling. And that's where you go in areas where you don't think that there's any ore, but you drill just to make sure that you haven't missed anything. And so we've started over the fall doing some of the condemnation drilling around our tailings, where we think our tailings and waste rock co-disposal facility is going to go. And then we've started some of the condemnation drilling and sort of some geological prospecting in advance of that as we built roads out to the east. And we think that there's actually some pretty interesting, we don't know if we're going to find mineralized zones, but there's some pretty interesting mineralization to the east of the Springpole pit, which has a few holes into it, but has never been really thoroughly explored. So we think that could be interesting. There's some other areas of past exploration around, kind of within a 10-kilometer radius of Springpole. And I think, any success on any of those other areas should really go to demonstrate that, one of the things that is a really strategic element of this project is that you'll be building a mine, in the middle of and adjacent to a really unexplored greenstone belt with 5 or 6 past producing mines in this Birchuchi greenstone belt. Small, high-grade mines, many of them, produced in the 30s and 40s or 50s. But this area around Springpole is a really interesting geological curiosity, and has seen, I always kind of say if Red Lake's seen $1 of exploration, Pickle Lake's seen 10 cents of exploration, and the Birchuchi greenstone belt, which sits in between the two of them, has probably seen a penny. So really, really underexplored. So I think there's a real opportunity for us to look a bit broader regionally. And I think that would add some significant value as, it then has potential to turn Springpole from a really strategic asset to a critically strategic asset.
Okay. Here's one. Dan, does the company plan on doing share consolidation with approximately, 700 million shares outstanding?
The share consolidation question,
you get that question a lot.
Pretty much every time that we have this, and I think we don't have any plans right now to consolidate the shares. If they're, we hear interestingly from about half of our shareholders. No, everyone has a view, and the views are all reasonably firmly held. And about half the people think that we absolutely need to consolidate the shares, and about half the people think that if you ever consolidate the shares, I'm going to sell all my stock because share consolidations are terrible. I'm personally, I think I'm pretty agnostic. I'm a believer in fundamental value, and so I believe every one of you out there is entirely capable of adjusting to the share price and a new number of shares. That said, we don't have any plans to do it right now, and I think you'd need a real catalyst or reason to do it. So, it's something that comes up every now and then. No plans to do it now.
Okay. I think we've got time for one last question. It says, Dan, what do you believe First Mining is so undervalued, and how do you plan to correct that?
Well, listen, I think the undervaluation here stems from two primary things. Number one, it stems from a perception of permitting risk and technical risk at Springpole that we just don't believe exists. And we believe it doesn't exist because we spend all day looking at the data. And when we look at the data, we are very confident that this project is going to be able to be permitted and ultimately developed and built and operated in an environmentally and socially responsible fashion. First and foremost, if you believe that, then we are trading at an irrationally low value, and that's demonstrated by, the $14 an ounce versus almost $90 an ounce for our peers. So that says, we should be trading 5 or 6x higher, and that's the average of our development peers, right? Not all those development peers actually have reserves. Not all of them have pre-feasibility studies. Not all of them are, as far advanced in an environmental assessment process. So with all that said, I think first and foremost, we keep going back to what is the real fundamental value of our projects and how do we surface that value? And first and foremost, the single biggest lever of value that we have in this company is Springpole. 1.6 billion Canadian value on our PEA and after-tax NPV at $1,500 gold. So that would be 1.6 of the 2 or 2.1 billion that we think we have in the whole portfolio. We need to surface that value, and we do that by moving the project through the environmental assessment process and by continuing to build strong relationships and ultimately win-win opportunities with our Indigenous communities. And I think if we do that, over the time frame, there's going to be a portion of the world that's not going to believe that you're going to get your permits until you have your permits. But I think as you move down that process and demonstrate progress and see concerns being voiced or not voiced, and see support or not support from local communities, then I think people can make those assessments along the way. But I think that's the single biggest lever that we have to surface the value. And so, there was certainly a big overhang on our valuation when we didn't have the financial flexibility to really invest in that process in the way that we needed to. And that is entirely why we've done what we've done in 2020 to deliver that financial flexibility to the company and to all of you, the shareholders here. So we now have all of the capital we need to get this project through an EA approval. I absolutely believe that. Now, do we have enough capital to build the mine? No, not today. But that's a discussion to be had when you've mitigated the risk, and we have a lot of the all the capital we need, we believe, to get to that key point of risk mitigation. So that's I think the biggest disconnect on that front. The other real value disconnect, and I think we've proven this out this year with some of the other moves that we've made, is that investors just have a challenge attributing value to the portfolio assets. And I think if you look at the beginning of the year, investors looked at our portfolio of assets, call it 5 million ounces in 5 projects in Canada in great jurisdictions, 6 million ounces. I think investors looked at those as liabilities. All we ever were asked were not where are the projects and what's the opportunity with them. We were asked what are the holding costs. And so I think we've demonstrated with Pickle Crow, these projects have real value. And we might not be the people to move them forward, but if we can find partners to help move them forward, we are going to be in a much better position to realize that value for some of the portfolio assets. And I think it's borne out very well at Pickle Crow. I think it's borne out very well with Goldland and Goliath. I think it's going to continue to bear out with Goldland and Goliath. I'm very excited about what that project's going to look like. Even beyond this first phase of a PEA, I think there's strategic value to that deposit and having, a federal EA approval mill just outside of Dryden, Ontario, because I think there's a dozen deposits within 100 kilometers that could ultimately contribute as mill feed to a project that I think you're going to be operating there for 50 years. So very excited about that. But I think we've demonstrated that when if we just have ounces sitting on the balance sheet in our company, in some companies it's great, fine, you'll get your $10 an ounce. For us, we've had to say, okay, there's ounces on the balance sheet, that's fine. Here's shares times share price, right? We own this much of, own 20% of Pickle Crow. The other 80% is owned by this company. It has this market cap. So therefore, it's worth this. Ultimately, I learned from my time as a private equity investor, you can talk about these opportunities. You can talk about these values. It's not until you finally turn them to cash that you can declare victory. But, I think it's moving them along that process to be able to say, listen, there is real value in this portfolio. So that's why when we look at what the focus is for 2021, first and foremost, it's continuing to advance Springpole. And we've made really significant changes to our team and really significant changes to our resourcing to be able to move Springpole through that EA process. Continued technical de-risking. There's going to be some optimization coming out of the PFS, and some still pretty exciting things to do there to add value to Springpole. Move forward on that. That's the single biggest value lever that we have in the company. We got to march forward on that as our number one priority. And the rest of the portfolio projects, I think, I think it's a good opportunity for us to spend a bit of capital to make them better and or consolidate them and improve the strategic positioning of them, sort of like we've done with Cameron with the acquisition of the East Cedar Tree property. And the other projects and the royalties, I think, we're looking at a number of different opportunities. But once we can demonstrate to people what the value of those are, it's hard for them to say that the value is not there. And so I think that basically, in summary, lays out the game plan for 2021. And I just want to make sure, we've had a number of our long-term shareholders here on the line, listening, catching up with us. I can't express enough how much we appreciate the support that we've had from all of you. There was a time when we were doing our financing in February. It really was, in some senses, the difference between us being able to get to where we are now, a 300 million market cap and a really strong treasury. It was having the support of those shareholders who believed in the company and believed in a new team coming together, and believed in our projects and our assets in a time when not a lot of other people did, that really made the difference. And a lot of you are here on the webinar right now, and we never speak frequently enough. But just as we're sort of coming toward the end of the year here, I just want to make sure that I say a really big thank you to all of our shareholders who've been here to support us, and we take it really seriously. We love hearing from you, and we'll look forward to a 2021 that's going to be full of what I think are very exciting moments as we continue to surface value out of this extraordinary portfolio. So thanks very much for those of you on the line here. Really, wish you all a very happy holiday, and hope you have an opportunity to find some rest and some peace and some joy over the course of this holiday season, which is going to be an extraordinary one for all of us. But no, thanks so much for all of your support, and we're going to continue working doubly hard for you in 2021.
All right, thank you very much for your time, Dan. And everyone in our live audience, please stick around for a quick survey. You can leave your details where we can follow up with any additional questions that you have. And until next time, see ya.